Hello everyone. We welcome you to the webinar organized by MyCFO, a leading implementation services company which provides CFO and finance effectiveness services. Our speaker for the day is Mr. Venkat, founder, director and joint head client delivery at MyCFO. Venkat is uniquely positioned to speak on today's topic because he has been an accountant, an auditor and an employee CFO and now an entrepreneur CFO at different points in his professional career. Mr. Venkat is a chartered accountant, cost and management accountant, and risk manager by qualification, and an entrepreneur and category creator by vocation. He is the co-founder of MyCFO, India's largest and fastest growing service provider of CFO and finance effectiveness solutions. His motivation is to leverage skills in the finance and accounts domain to assist business owners and investors to scale up and monetize their businesses. He has worked with promoter groups and managements across industry verticals, business sizes, and stage of growth, and seen a variety of business and finance situations. Prior to starting up MyCFO, he was the Director Finance and Corporate Affairs at the India subsidiary of Hines, one of the largest privately held real estate developers in the world. He has also been a CFO at the India subsidiary of Aon, the world's largest reinsurance broker. He did his articleship and earlier career at PricewaterhouseCoopers, the world's largest professional services firm. He is well-read and has been a speaker at various industry forums. In today's webinar, Venkat will be sharing his views on how a CFO, a controller, and an accountant have three different roles within a company. If you aspire to make a career in one of these roles, stay tuned to the webinar. Over to you, Venkat.
Hello everyone. Thank you all for joining in for yet another session of MyCFO's webinars. Today's topic is on the difference between an accountant, a controller, and a CFO. We thought we would do this session a little differently. I just got one slide to show you. What I'd like to do is to keep this session somewhat interactive. I would strongly encourage you to write in your questions to Harshal, and we'll be happy to take them and provide answers during the course of the webinar. This webinar will be useful to you if you are a chartered accountant and you are looking to make a career in the industry. And if you're not clear about the difference between an accountant, a controller, and a CFO, this session will be helpful to you. It will also be helpful to you if you are keen to find out how you can fast track your growth towards becoming a CFO. This session will not be useful to you if you are planning to make a career in professional services. So if you're keen on joining one of the big four, like say a PricewaterhouseCoopers, or any of the mid or small size CA firms, this session may not be very helpful to you. So let's talk about what is included within the gamut of finance and accounts, based on which we can delve a little bit into the difference in the role between an accountant, controller, and CFO. Finance and accounts as an area covers the day-to-day accounting, which is really the bookkeeping, the debit and credit. It includes the generation of trial balances at period end, the creation of a P&L, a balance sheet, and cash flow. It includes the generation of periodic MIS reports, which could be a simple example of which could be an accounts recoverable report. It includes things like raising of invoices on customers. It could involve follow-up of collections from customers. It may include checking and passing of invoices received from vendors. It may also include basic compliances in the form of deduction of TDS or charging of sales tax, excise, or service tax. All of these tasks typically fall within the ambit of an accountant's role. So what does a controller do? If an accountant takes care of the bookkeeping, what is the role of a controller? A controller typically is a person who uses the MIS created by the accountant to go beyond the numbers and provide an interpretation of the business results. A controller is a person who is responsible for implementation of internal controls, which could mean checks and balances. It could mean simple things like having two signatories on every check. It could mean a schedule of authority that will define who will approve what kind of payments. It could mean things like obtaining multiple quotations before making a purchase. So anything to do with the control architecture of a company falls within the job scope of a controller. A controller is also usually the person who is responsible for compliance in a company. So that could mean things like filing of income tax returns, ensuring that Companies Act compliances are complied with. It may include filing of TDS returns, sales tax returns, payroll taxes, and so on and so forth. Usually, a controller is also involved heavily in the completion of the statutory audit of the company, and he is also usually responsible for the completion of the internal audit. So although the internal audit may be outsourced, as it often is in most companies, the implementation of the findings of the internal auditor's reports falls within the role of a controller. A controller is also usually the person who is responsible for business process improvements. So any changes that need to be made in the workflows of any business process, not just finance, but it could include things like sales, procurement, or production, usually comes within the ambit of a controller's role. So if a controller does all of this, then what does the CFO do? A CFO, the key difference between a controller and a CFO is the F word in the CFO, which is finance. So a CFO is usually responsible for the cash flow and fund flow management of the company. He is usually responsible for raising funds, which could be either from banks or it could be from private equity players. A CFO is also usually responsible for the budgeting and performance measurement processes in a company. Creation of a strategy document, creation of a business plan, creation of monthly KPI charts that help the CEO or the investors to keep track of actual performance vis-a-vis budget performance is the responsibility of the CFO. A CFO is also usually responsible for investor relations. So this is not just your existing investors, but could be potential investors in the market. A CFO is also the person who is responsible for reporting into the board. Very often, the members of a board of directors in a company would look to the CFO not just to provide them with a comfort on the status of compliances, but also to help them interpret the business performance of the company. What a CFO does in many ways is really kind of shadow the CEO. Very often the CFO is the go-to guy in the company. He is the person who is expected to stand in if the CEO is not available. What we need to understand is that, like any other function, the finance and accounts function also operates like a pyramid. And there are various tasks which take a lot of time but are really routine in nature, and a lower value add will sit at the bottom of the pyramid. An accountant is usually the person who is in charge of the bottom of the pyramid. The controller, who is really responsible to ensure the completeness, the accuracy of the financial statements of a company, and also ensuring the controls are fully in place, is the person who is right in the middle of the pyramid. And the CFO is right on top of the pyramid. He's the guy who sits on top of the finance and accounts value chain. So this is a little bit to do with the roles of an accountant, a controller, and a CFO. So the question is that as a chartered accountant or a person who is aspiring to be a chartered accountant, what is your career path? What is your career goal? When you finish your career at the age of 50 or 55 or 60, depending on how long you work, what do you want to retire as? Do you want to retire as an accountant? Do you want to retire as a controller? Or do you want to retire as a CFO? The first thing I need to tell you is that there is really nothing called a good or a bad aspiration. There are a lot of us who are very happy to play an accountant role, and if that's your aspiration, then that's fine. But if your aspiration or ambition is to become a CFO, then it's very important for you to understand what separates the men from the boys, or what separates the CFOs from the accountants. Understanding the peculiar characteristics or features of what makes a CFO is important, so that you can learn those skill sets and you can fast track your growth. You can fast track your career to become a CFO. If you look at the typical salary of a CFO in a well-run company, you will find that a CFO is usually a person who is between 40 to 45 years of age, say maybe in a company between 500 to 1,000 crores in turnover. Let's say it's a manufacturing setup. Typically, a CFO would have between 15 to 25 years of work experience. Someone like that with only a CA degree, not necessarily with a costing or an MBA or a CFO background, should be able to draw a salary which is in excess of 50 to 60 lakhs per annum quite comfortably. If the company is larger and if the CFO is really good, then in today's time, having a salary of over a crore or crore and a half for a CFO is not a surprising number at all. So what makes the CFO so valuable? And what explains the delta between the salary level of a CFO and the salary level of an accountant? A good quality accountant today would possibly be available in the market at anywhere between maybe 60,000 to 80,000 per month, which would kind of make it between 7 to 10 lakhs per annum. A good quality controller would typically earn between 20 to 25 lakhs per annum. So the difference between, say, a controller and an accountant is probably between 2 to 3 times. But if you look at the gap between the controller and the CFO, the gap could be as much as 4 to 5 times. There must be a reason why CFOs are so specially priced as compared to accountants and controllers. The key reason is the business impact. Accountants and controllers play a reactive role. It's a little bit like being like an auditor. Nothing wrong in being an auditor, but at the end of the day, it is a postmortem. What you're doing is to find out how the patient died. What the CFO does is to find out how to keep the patient alive when he's still alive, and how to make him healthy, and how to keep him fit. What the CFO does is nothing to do with accounts and cash flow. A CFO is a person who is working with the CEO and the investors to figure out how to make the company valuable. How do we scale up the company in a manner that is not just profitable, but it's also sustainable? A company that has got a bad CFO can suffer a lot, but a company that has got a really good CFO can truly enhance its business performance. If a company has got a bad accountant, the impact of the bad accountant is not much. It's quite possible that the monthly closing activities get delayed by a few months. Maybe the annual audit would get delayed a little bit, but that's really the end of it. If you look at a controller, and if somebody has got a bad controller, maybe there could be some losses arising out of poor controls. But if you have a bad CFO, then I think the consequence of that could be life-threatening to a company, which is why CFOs are very highly priced in the market. A CFO talks and thinks in terms of business. An accountant talks and thinks in terms of debit and credit. A controller talks and thinks in terms of controls and financial statements. But a CFO is a guy who is talking and thinking business. So now that we have understood the kind of salary differences between a CFO and an accountant, or a CFO and a controller, what are those peculiar characteristics that help some accountants to make the cut to a controller, and what are those characteristics that help a controller to become a CFO? There are four things that you need to look for, and consciously four things that you need to keep in mind if you aspire to be the CFO. The first is the ability to relate to other business functions. A good quality CFO is very rarely just an accountant. He is a person who can talk the language of purchases, of sales, of production, of HR, and of strategy with as much ease as he can for finance and accounts. The ability to work with other departments successfully is one of the hallmarks of a good CFO. The second thing that a CFO does successfully is to talk the language of cash. Very often we as accountants get too carried away with the P&L, with the accrual concept, and with debit and credit. Usually the way investors, promoters, and CEOs think about the business is on a cash basis. And this is where a good quality CFO is able to relate to them and talk the language of cash and not just of accrual or of the P&L. The third thing that a CFO does well is performance measurement. A good quality CFO is not just satisfied or content with P&L or balance sheet metrics. All of us in our management accounting paper have studied about ratios, but if you look at the ratios that we study, they are all revolving around the financial statements. A good CFO is constantly on the lookout to measure different parts of the business, because a CFO believes that what cannot be measured cannot be controlled. So a good quality CFO would try and measure things like, say, the value of the sales pipeline, or the unexpired portion of revenue or sales from existing contracts. He may want to measure product or customer level profitability. A CFO will want to measure what is the revenue per full-time employee. A CFO will want to measure what is the average span of control that a senior manager has got within the organization. He may want to look at what is the value add. If you take a map of the value add across the company, which department is adding how much value to the total profit. These are kind of issues that a good quality CFO engages in. The fourth thing that a fourth quality that the CFO must have is the ability to articulate. All successful CFOs are very good communicators. So they're not just good at Excel spreadsheets and emailing, but they are also able to influence and control decisions by use of good verbal and written communication skills. A good quality CFO will be able to explain a financial position in a manner that even a layman can understand it. A good quality CFO is a person who makes complex financial issues simple without making them simplistic. It's very hard to keep things simple. That is the job that a CFO does. A successful CFO makes complex issues look simple. He can explain them in a language that people can relate to and understand. So what should you do if you want to be CFO at a young age? You want to fast track your career path. First, you must join the industry as soon as you can. If you want to be the partner in a CA firm, then the profession is where you should be joining. If it's clear to you that you want to be the CFO or CEO of an organization, then join the industry quickly. The second thing that you should do is to try and gain experience with companies of different ownership and management styles. From personal experience, I found it very useful, for instance, to work in a joint venture where one partner was a multinational company and another partner was a local company. The way in which the two shareholders thought and behaved and the way in which they wanted to manage the business were completely different, but the objective was the same. How do we improve the profitability of a company? Working in organizations like this can give you a phenomenal exposure into different ways of reaching the same goal. Try and get an exposure in multiple industries. A good quality CFO is usually someone who has spent a little bit of time in manufacturing, a little bit of time in services, and also a little bit of time in, say, a trading company. Working in different types of business models will enhance your experience and it will make your CV very valuable. It may also be useful for you to consider doing a stint in companies of different sizes. The kinds of challenges that a CFO is faced with when you are a CFO of a large organization vis-a-vis being the CFO of a startup are completely different. Try and work with companies which are at different stage of growth, different stage of evolution. That again will make your CV extremely valuable. So these are some simple things that you can do to fast track your growth as a CFO. So typically, let's quickly understand the slide that has been put up for a while in front of you. Let's look at the first two columns. The third column is about how my CFO is different from a professional CFO, but that's not really the agenda of today's discussion. We confine ourselves to the first two columns. How is an accountant different from a CFO? So both are full-time employees within a company, but if you look at the reporting, typically a traditional accountant would be reporting to a CFO, but a professional CFO would be reporting to the promoter or the CEO. Usually a traditional accountant would have spent around 20 years in his career, but if you look at his salary levels, it would be below 12 lakhs per annum. A professional CFO would typically also would have 20 years of work ex, but his salary could be well in the region of 75 to 100 lakhs per annum. In terms of skill sets, an accountant has got lower value of skill sets, whereas a professional CFO sits on top of the skill chain in the finance and accounts domain. If you look at the knowledge updation and practical experience, a traditional accountant struggles in this area. There is very little or no updation. The only changes that an accountant typically is exposed to are regulatory changes. But on the other hand, a professional or an employee CFO is exposed to larger growth opportunities, larger opportunities for learning and development. If you look at the approach, a traditional accountant sometimes tends to have a fairly theoretical approach. He finds it, he's very comfortable working in front of his own computer, but struggles a little bit while working with other departments. A CFO usually is very focused on implementation. He's not so focused on the efforts or the work involved, but he gets very focused on the results delivered or the impact created for the organization. So that very quickly is the difference between an accountant and a CFO. A quick minute on MyCFO. We provide outsourced CFOing solutions for growing enterprises. Our clients range from a turnover of 0 to 3,000 crores. We work across industry verticals, across growth stages, and across different types of management and ownership. We have worked with over 200 companies till date. We are a great training ground for future CFOs because each of us who is working in this company, there are 130 of us who are spread across 7 cities currently. Each of us is an implementation guy. Each of us manages anywhere between 1 and 15 clients. And each of us is an operating CFO at one of our client companies. Across different types of companies, and across different types of sub-functions within finance and accounts, then there are two options open to you. One is you can join the industry, work with one company at a time, which is the conventional way to build your career. The other unconventional way that MyCFO offers is for you to join us and for us to give you the exposure of working with more than one company at a time, which fast tracks your growth as CFO. And if maybe your peers and contemporaries will make it to CFO at the age of 42 or 45, it's our aspiration to help you to make it to the CFO role maybe at the age of 35 or 37. So if you're keen on saving those 5 to 8 years of your life and become a CFO fast, then maybe a career at MyCFO may be worthwhile for you to consider. So that's it really from my end, and if there are any questions, I'd be very happy to take them. So I have one question here, which says that what kind of work hours does a CFO put in? Does he have to work long hours? Right. So I think that both an accountant and a CFO work very hard. But I think the fundamental difference between the two is that an accountant could possibly be up to 11 or 12 in the night trying to kind of figure out why a bank reconciliation is not tying up or why a trial balance is not tying up. CFOs that we work with also operate under a lot of stress. I don't know whether they necessarily keep long hours, but whatever hours they keep, all to take difficult decisions. An accountant's life is about black and white. Decisions are fairly clear-cut. Either you're compliant or you're non-compliant. You have cash or you don't have cash. Either you make a payment or you don't make a payment. A CFO's life is filled with decisions of gray. There are no right or wrong answers, and there are trade-offs. What is good for one reason may not be so good for another reason. So how do you take a decision where the trade-offs are not very clear? How do you take decisions when you don't have full data at your disposal? So I think the life of a CFO is not necessarily long in terms of number of hours, but it can be quite stressful in terms of the decisions that a CFO may be called upon to take. Okay, I have one more question. Is it very different being the CFO in an Indian promoter-run company versus being CFO of a multinational corporation? Some fundamental things remain the same, right? CFOs, regardless of what kind of company you work for, or whether you're working in India or overseas, are responsible for business performance measurement. You're responsible for cash flow management. You're responsible for fund flow. You're responsible for reporting. These things really don't change. But the expectation of the CEO is very different in an Indian promoter-run company vis-a-vis being in a multinational corporation. In a multinational, a CFO's role tends to be very high on corporate governance, on compliance, on reporting to the board, on budgeting, and on ensuring compliance with code of conduct of the overseas parent company. As a CFO of an Indian promoter group, life of a CFO is fairly dynamic in the sense that the focus may be lesser on governance and board and business performance measurement, but tends to be very high in terms of cost reduction, negotiations with customers and vendors, fundraising with banks. These are types of areas where CFOs of Indian promoter-driven companies tend to be more active. To say which of these roles is more difficult or which is better is just two different things. It's like comparing an apple and an orange. Both are fruits. It really depends on what kind of flavor you like better. I have one more question. Is there a special course that an accountant or a controller can do in order to become a CFO? Question. I'm not sure if there is any course that is available. What is, however, highly recommended is if you're really serious about becoming a CFO very quickly in life, then you must spend time with successful CFOs. And I think there are several fora now where you get a chance to network and interact with CFOs. whether it's a CII or a FICCI, both of them organize CFO seminars on an annual basis. You also have CFO forums that are run by very good organizations like the Economist IMA. So some of these forums can give you an opportunity to meet up with successful CFOs who can share some tips with you on how you can make the transition from an accountant to a CFO quickly. The other way which I strongly believe in is that you must get into situations. Go beyond the call of duty. If you just remain an accountant, your companies will possibly just let you be an accountant. But try and get involved in areas beyond traditional accounting. Go beyond your comfort zone. Get involved in situations that people don't want to touch. Learnings are always in difficulties. The more challenging positions or situations you accept, you will find that your ability to grow to a CFO role would be much faster.
Okay,
I have
so
one more question. What is the typical tenure of a CFO in an organization? Okay, this is a hard one. Okay, I've known CFOs who have been in the same company for the last 20 years and done a stellar job. It's not as if they're stagnated or the company is stagnated. I mean, they just continue to reinvent themselves over the period of that 20 years. I've also known CFOs who have played very short roles, sometimes as short as a year, but in that 1 year, they have been able to make a tremendous impact. Let's say, there's a stress company and the CFO has been called in to turn around the company, and he's been able to do that in a year's time. So I don't think there's really kind of a standard tenure that one can really say is an ideal tenure. I think it's a little bit like people asking Sachin Tendulkar when he's going to retire. I guess the answer is, as long as you feel motivated to playing, you continue to play. As long as you are able to contribute meaningfully and effectively, I guess you continue to be CFO. But it's hard. It's very hard for a CFO to continue to stay relevant. It's a bit like a doctor's job. If a doctor is really good, the patient should not need you after a point in time. So good CFOs are CFOs who make the organization independent of themselves. So a typical tenure, I think, is 3 to 5 years, where both the organization and the CFO can get the best shot of each other. But as I mentioned earlier, there will always be exceptions to this kind of a rule.
sure. So we have a few questions over
Okay,
here.
I have one more question here. Is it easy for people from profession to make a shift to the industry and go on to become CFO? Again, I think a very good question. It has been done before. There are several people who have spent a long time in the industry, and this is, I would say, more common in the West as compared to India, where, let's say, the partner of a big four could actually move as a CFO of a large corporation, or even vice versa. It's relatively less common to see this in India. I think in India, once people go into the profession and they're pretty clear they want to be the partner, then they just kind of stay on there and become a partner. It's rare to see people who are kind of moving at a senior level from a firm to a company. So if you're making this transition, I think that you need to understand that it's not going to be an easy transition, right? Because as an auditor or a tax guy or as an M&A consultant, you're trained to being a specialist in an area of cutting edge knowledge. Your strength is reading. Your strength is keeping in touch with the latest regulation. Your strength is in understanding how the regulation needs to be implemented in a particular industry. Your strength is not necessarily in getting things done within the F&A team or actually running a business. So it takes some time. It's a move from being an advisor to a doer, from being a consultant to an accountant. It takes a little bit of time, but again, it's a question of your mindset. If you're willing to have an open mind and move beyond your comfort zone, then yes, it is possible to make a successful transition from a professional services firm to being a CFO in the industry. I have one more question here. Okay, so this question is that we have understood how to make the move from an accountant to a CFO, but is it easy for a CFO to make the move as a CEO? Okay, again, a very good question, and I think every accountant should aspire not just to be a CFO, but to be a CEO. So what does it take to make the move from a CFO to a CEO? I think there are two specific skills that are important for a CEO that go beyond what a CFO does. The first one is people skills, and the second is leadership skills. So one, it needs the ability to relate to people across the organization. It could be a blue-collared worker, it could be a highly paid professional, but a CEO is usually a guy who can kind of relate to people across the board. The second thing that a CEO needs to provide leadership, and that usually is a trait that is born out of how strong a personality you are, how strong a human being you are, how good a human being you are. So no matter how good a CFO you are, it's still very important to be a leader. Now the question is that are you just good enough to be the leader of the finance and accounts team, or are you good enough to be the leader of the organization? What you will find as you spend some years as CFO is that you become more and more of a generalist. You may not know the exact section of Companies Act 2014, or you may not know the exact provision in an Income Tax Act, but you will be able to know how to respond to a business situation. So as you get better and better at reading business situations and proactively dealing with them, the chances of you becoming a CEO becomes better. I got several more questions, so I'm going to make an effort to try and answer as much as I can in the next 5 to 6 minutes. Are CFOs paid well enough given the amount of stress they handle? It depends on who's answering the question. If it's the CEO or the company, they will say yes, the CFO is being paid well enough. If you are the CEO, you will always feel that you're not being paid well enough. Right? I think that generally CFO salaries are now quite competitive in relation to the heads of other departments. In several companies that we work with, within MyCFO clients itself, I know for a fact that a CFO has probably got the best salary among the heads of departments. As I mentioned to you earlier, the CFO is virtually the number 2 in the company. So most companies, I think, are paying their CFOs well now. Now, is it adequate given the level of stress they handle? Really is, I think, a question that will need to be answered on a case-by-case basis, depending on what the peculiar circumstances of this company are, right? But I think that today, promoters and CEOs are very willing to pay the right price to recruit the right quality of CFOs. Accounts and finance is no longer seen as just a support department; it's seen as a key driver of business. Okay, the next question is, qualifying as a CA is tough as exams have got a low passing percentage. What are the alternate career options for the ones who are unable to pass the final exam? Okay, so I got to tell you one thing. I think being a CFO has got nothing to do with your being a chartered accountant. Being a CA gives you an advantage to make it to CFO, but not being a CA is not a disqualification. Some of the best CFOs I know, for example, Mr. D. Sundaram, who was finance director at Hindustan Unilever, was not a chartered accountant, he was a cost accountant, and not only was a very strong CFO within HUL, he is currently playing a very successful role as the vice chairman of TVS Private Equity. So while it'll be great if you can pass your CA exam, the fact that you haven't been able to pass it should not be a deterrent for you to continue to pursue a career in finance and accounts. Having said that, I think it's important for you to take on at least one professional qualification. So if it's not a CA, having a CFA, for instance, would be very helpful. If you look at some of the other degrees, I think like a management accounting degree, like a CWA, or a company secretarial, I would rank them slightly lower as compared to a CA or a CFA, but these are good qualifications to have as well, right? So if you haven't been able to pass your CA exam, tough luck. but don't stress about it. You should still look to carry forward your career in finance and accounts. Okay, the next question is different roles within finance category are bound to have different pay scales. Does it always depend on the specialized skill set? Okay, so this is an interesting one, okay, because to be honest, I think the specialization in skill set is something that's probably relevant in the early part of your career, where you could probably be a tax guy or an M&A guy or you're a legal expert or you're a fundraising expert and so on. But as you make the move to a controller, you become more of a generalist. And when you are a CFO, you are completely a generalist. It's very rare to find a CFO who is only a tax guy. I mean, I can't think of any successful CFO who has stuck only to one specialized skill set. I think the whole point of being a CFO is that you become a generalist so that you're able to read business situations. Companies pay CFOs not to be a specialist. You know, that's a talent that can be acquired from outside. There are professional services firms which you can pay to get specialized skill sets. So that's not necessarily a quality that you look for in a CFO. The other aspect of specialization is industry specialization. And that again is a bit of a double-edged sword, right? So if it's an industry with many players, maybe it makes sense for you to do an industry specialization because you'll always have a very strong value within that industry. However, you need to keep in mind that transferability of jobs across sectors may become a problem for you. So let's say you're being within the finance and accounts teams of only insurance companies, and if insurance as a sector doesn't do too well, then the chances that you will get an employment outside of insurance can be quite remote. So as I said, it's a double-edged sword. Maybe you get a great value within the insurance industry, but maybe it spoils your chances of making a sectoral move at some point of time in the future. So it's a bit of a trade-off for you to consider. Okay, one more question here. Does the role of a CFO overpower the role of an accountant and a controller? I think so. I think if you're using the word overpower in the sense of whether the CFO supervises the work of an accountant or controller, I think the answer is yes. A CFO is a top boss in the finance and accounts team, and therefore he would review the work of an accountant and a controller. Chances are that an accountant's work itself is reviewed by a controller, and the controller reports it to the CFO. So that definitely tends to happen. Having said that, I think successful CFOs work in a spirit of equality and freedom. So usually CFOs, successful CFOs like to work in flat organizations where it's not so much about the hierarchy and a reporting boss-employee type relationship. Many of them work in a very cooperative manner with their teams and they give adequate space for the accountant and controller. But at the end of the day, I think when it comes to decisions on hiring or firing, decisions on job descriptions, decision on pay scales, increments, performance appraisals, a CFO will have the authority to review the roles and the work and the salary levels of both the accountant and controller. Okay, the next question. It is believed that young businessmen have a do-it-yourself mentality. They rely on ready softwares to avoid hiring a bookkeeper and accountant. How true is that? So it's true, it's not just young businessmen, but I think businessmen of all ages try and do a lot of things themselves. That is because they are entrepreneurs. They've got a strong sense of self-belief. They are very confident about their own abilities, not just on the business side, but sometimes even on the accounting side. But can they do everything on their own? I don't think so. Can they rely on ready softwares, which is your question, to avoid hiring a bookkeeper or an accountant? I think absolutely not, right? Because a software is nothing but a tool, but you need someone to be able to use the tool. It's like saying that, you know, can I just have a chisel and sculpt a marble sculpture out of it? The answer is no. You need to also have a craftsman who knows how to use the chisel properly. So merely having a tool does not replace the need for the person who will use the tool effectively. So I don't think having a software is really a replacement for a bookkeeper or an accountant or a controller or CFO. Next question, how difficult is it to interchange all roles? As in a controller looking to move into the role of an accountant or vice versa. So, see, firstly, I think we need to understand the sequence. The sequence is you get to be an accountant first, and then you become a controller, and then a CFO. I don't know of any controllers who want to come back and become an accountant because then it's almost regressive, right? I mean, you want to be progressive in your career, not regressive. It is, but it is hard to make the change, okay? Even from an accountant to controller, it's not easy because we all get trapped in our day-to-day jobs, day-to-day tasks, and we forget to do one very important thing, which is to learn new skills. So the difficulty in moving from being an accountant to a controller or from a controller to a CFO is really dependent on how quickly you can move out of your comfort zone and pick up additional skills. What are the prerequisites if one wants to make a career in the international market? Okay, so I think doing your CA is a good option because the Indian Chartered Accountancy is recognized in several countries. Think of doing the US CPA. I think that's something which will be useful. It's again a very globally transferable kind of a qualification. You can think of doing an American CPA, you can think of doing a CIMA from the UK. So there are several qualifications that will help you to make an international move. I mean, having even the basic Indian CA will help you in several countries, including parts of English-speaking Africa, for instance, or the Middle East. But I think in today's world, it always helps to have those additional qualifications and skill sets in your hands. Opportunities, I think, are today probably more in Southeast Asia and Africa, probably more than the traditional markets that accountants have gone to, which is really in Europe and the US and in the Middle East. I think these are the three places where Indian accountants have typically gone. But I think the opportunities now, the large opportunities, are really going to come up in Southeast Asia and Africa. On a slightly different note, do look at career progression overseas, not just in terms of qualifications, but also in terms of languages. If you're able to kind of pick up Japanese or Mandarin or Spanish, I think these are good languages for you to be able to pick up to progress your international career. Okay, so it looks like we have come to both the end of the time as well as the questions. So thank you all for having joined us in this webinar today. It's been a pleasure, and I was particularly pleased to see the number of questions that you had. If you still have questions, feel free to write in to me on Venkat, that is VENKAT, @wealthtree.in, that's WEALTHTREE.in.